Hey everybody, my name's Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm covering disruptive tech for a broad audience of retail and institutional investors across the globe. Today we're going to talk about a company called Arrival. They're building electric vehicles, and the title on the slide here says it's complicated. And we're not talking about the reason for the stock falling being complicated. We're talking about the company itself being quite complicated. Now, before we get into that, I wanted to give you an example of simple innovation. So if you go to Havana and you go to use a bus, walk up to the station, you'll see a bunch of people milling about. Well, you simply say El Ultimo, and what will happen is somebody will raise their hand. Well, remember who that person is. And after some minutes, somebody else will come up and they'll say the same thing, El Ultimo. And then you raise your hand. And everybody just gets to do whatever. They sit around, mill about. And then when the bus shows up, all you have to do is get in line behind the person that raised their hand when you said El Ultimo. And then the person who saw you raise your hand, they get in line behind you. And what happens is this big group of people suddenly merges into this orderly queue. And it's really fascinating to watch. The Cubans are particularly innovative because they have so few resources. So this queuing mechanism allows everybody to get along, and because it's very hot there, nobody wants to be standing in the blistering sun. So you can go and hang out in the shade until the bus shows up, or whatever sort of queuing, because they're doing lots of queuing, right? They used to have the government food stamps and whatnot. So that's a interesting example of simple innovation. Now, what Arrival is trying to do is anything but simple. So they're trying to reinvent the electric vehicle. And in order to do that, they decided to raise capital using a special purpose acquisition company. And you can see the price action of the stock since that happened. So there was the debut where it breached $30 a share. And you can see that it traded above the debut price, or let's say the SPAC price of $10 a share. And then more recently, it's fallen 63% below that. There's likely to be a large number of retail investors who bought that hype and now are way underwater on their position. So why were investors so excited about Arrival? Well, we think that's because they saw a lot of characteristics that we see in Tesla, first principles thinking. So 70% of the components that Arrival has built for their van and 40% for their bus are either owned or developed in-house. So the majority of the vehicles they're building, they're responsible for the parts, as opposed to putting something together from components built by others. One example of that would be their materials they're using for their vehicles, which don't require paint. They're also using advanced production automation like Tesla. There's an impressive total cost of ownership. And mostly this is a play on electric vehicles that isn't Tesla. So everybody's always looking for the next Tesla these days. And that's why electric vehicle SPACs all were extremely overvalued. And we warned people about that back when they were debuting over the years. So Arrival's trying to do a lot. You see here 3 vehicles that they're working on: a bus, a van, and a car. This is actually the order from left to right in which they expect these to debut. So the van, that's actually has let's say a 10,000 unit order from UPS, who happens to be an investor in Arrival. Now that order can be canceled or modified at any time with no penalty. So you need to take that with a grain of salt. There's an attractive investor list behind Arrival. You've got BlackRock, Hyundai, Kia, and of course UPS. A lot of positive PR. So in researching this piece, we came across numerous articles that all seem to focus on the company as if it were already a success story, as opposed to viewing it with a certain degree of suspicion, because the entire value proposition falls flat on its face unless Arrival can get their microfactory to work. And that's a very important part of the value proposition. This microfactory, it operates on a very small footprint, 200,000 square feet, takes 6 months to build, costs around $45 to $50 million. And the operational expense savings they're expecting 50% less compared to a traditional OEM facility. That's a very bold claim. And in their 20F that we use to produce this piece, that's their 10K equivalent for 2020, because this is a foreign company, the primary driver of their operational expenses are proprietary composite materials that don't require metal stamping, welding, or paint shops. So bear that in mind. These microfactories, once complete, can manufacture 10,000 vans a year or 1,000 buses per year, assuming 2 shifts a day. And if you assume 80% utilization, that's about 22 vans a day or about 2 buses a day. Now, milestones to watch. Everything that investors should be focused on right now surrounds these microfactories, particularly the first operational microfactory to come online. So that would be for the Arrival bus. The Bicester, UK facility is said to be operational before July 1st of this year. Then we have the Arrival van, production in the UK before October 1st of this year, and then production in the US by January 1st, 2023. That's when they expect to be operational. Now, a article by Bloomberg talked about how they plan to deliver 400 to 600 vans by the end of the year to customers. So there are the milestones to watch for. We want to see microfactories coming online, and we want to see vans and buses being delivered to customers, because that means that payments will be arriving shortly. Now, there was also a video by Bloomberg, just going back to that positive PR. There was a video by Bloomberg talking about a tour of a Arrival microfactory. Well, that's a bit misleading, because the tour was actually of their R&D department and of a microfactory being put together. So they don't yet have a microfactory that's churning vehicles out. Let us know. We'd like to see the video of that. That's when we'll come around to take another look. Now, when we're talking about valuation, because they don't have any revenues, we can't use our simple valuation ratio. When the first day of trading, the company started at $22 a share and was valued at roughly $13 billion. Today's market cap is $2.34 billion, which is a drop of about 82%. So the question is there value to be had here, or is this a value trap? Now, to try to gauge intrinsic value, another thing we can look at is the last private round they took before becoming a SPAC, a publicly traded company. That was back in October 2020. They took in $118 million Series B at a $2.9 billion valuation. That means that very sophisticated investors like BlackRock, Hyundai, UPS, Kia decided that's what the company was worth. Today, you get that same company at a discount of about 19%. Now, there's a couple things to mention before we get to the conclusion. The first is that this is a Luxembourg incorporated company. So while they talk about being headquartered in London, it's incorporated in Luxembourg. That only matters because that changes the reporting requirements of what they can tell investors, or let's say what they have to tell investors. And that's something they mention in the 20F. So bear that in mind. There's also the elephant in the room, the Russian founder, who has, let's say there's no connections there that may be of a concern for this company. And in one of their recent calls, he had asked for anybody to raise any questions around that if they had any concerns. So one shouldn't be worried about that. Now, to conclude, we don't invest in companies unless they've achieved meaningful revenues. That's $10 million a year or more. As for Arrival, we're going to be really excited to hear how production goes once that first microfactory comes online. What they're trying to do is extremely difficult. And what can happen is that you can have a company that gets into this mire of perpetual slippages. They keep slipping and slipping and slipping and making small incremental progress over years and diluting shareholders as they go along. Now, Arrival has about $905 million that they can use to get these microfactories up and running. The first one that's going to produce those 400 to 600 vans, that's going to be working at a single shift. So the recent article by Bloomberg described how their forecasts have been dropping a bit, and that may be attributed to their share price decline, which started in November. we don't really care about all that noise. We care about when a microfactory comes online and when it's producing vehicles. As soon as that happens, we should start to see revenues coming in. That's when we'll take another look at the company. So if you have any questions or comments, we noted this was a very popular stock amongst our readers, which is why we decided to cover it. There's a research piece that accompanies this. That will be in the description of this video. Just make your comments on the video, we'll respond to them. Make sure you subscribe to our channel. Thanks so much for taking the time to watch this video.